Welcome back to another riveting discussion on what the heck is happening in the real estate market this week. Oh boy, we've got some good conversation this show. And I'm glad you guys are all here, whether live or on the replay. But this week we're talking about foreclosures. Foreclosures are all over the news. Every time I turn around, there's an article about foreclosures on the rise and what's happening with foreclosures. They're creeping up and all the things. I know it's going to lead to the housing market crash and all the stuff. So let's talk about it. We're going to chat about it and find out what the heck is going on behind the headlines as usual, because as we know, the headlines don't always tell the full story, for sure, because is it as big and scary as it is online, with what they say? Probably not. But we've got that. I've got some other stuff cooked up here, but I'm going to bring on my friend to join in the conversation, coming over here from California, Mr. Joe Porreca.
Hey, Jen.
How you doing there, my friend?
I'm doing great. How are you?
I'm doing fantastic. How are things in
Awesome.
good old Claremont, California?
Things are great. We finally hit some spring weather. It was like cold and dreary here, which is not normal for us Californians. And finally, we're hitting like the low mid 80s today for like the first time this
Really?
year. Which it's beautiful today. It is like 83 and sunny, and I mean it is just like a California day.
I'm gonna live vicariously through you, Joe, because I'm
Yeah.
over as I'm sitting over here. It is a brisk 47 degrees
Oh
in
no, no, that won't
Massachusetts.
work. You know, I,
Blech.
I'm really glad that we're talking about foreclosures on the stream today, because I just did a stream last week and we talked about the same stuff. And I'll tell you that it's just so interesting to hear the way in which information is presented
Ugh.
uh, to evoke a certain feeling or response.
You sound like a psychology textbook
Yeah,
there.
sometimes we have to be, but I'm glad we're talking about it today because it's an important thing, and this is the kind of the latest, sort of housing doomer crash bro type headline, and it's very interesting to look at the data, and I'll reserve my comments for when we get into it further.
Yeah, I concur. We got Mary Pat in the house. It says
Hey,
she
Mary.
says I have so many questions trying to get my house together for sale here in Maryland. Well, you're in the right spot, Mary. You're in the right spot, and we're glad you're here for sure. So before we get started, though, Joe, I got some breaking news.
Oh,
Here we go. Hot off the press. So we got this article that I came across, which I thought was interesting. We're going to just touch on this before we get into the main event. Former Irving real estate executive pleads guilty in fraud case. This is coming out of Dallas, Dallas County. Uh, this was what, last week, last Wednesday. Pauline Carando, 73 years old, accepted a plea deal including prison time, probation, and restitution. But a Dallas County judge told her if she can't pay, he won't accept the deal. A former Irving real estate executive has pleaded guilty to stealing money from people in real estate deals for years. This is another, like, I try to find PSA announcements, Joe.
yeah.
This is something that
Yep.
people should watch out for. So it says dozens of people have waited for more than 8 years for justice. On Wednesday morning, after several years of delays, a packed courtroom watched Dallas County Judge Brandon Birmingham address Corando. Um, Side note, Coronado. Excuse me, not Corando. Corando is one of the guys in the Sopranos show, the older guy, right, with the glasses. I digress. Coronado, who waived her right to a trial. My understanding is that you've waived all your rights and pleaded guilty. That's correct. She is accused of stealing from potential home buyers and
Oof.
homeowners through so-called rent-to-own schemes. This is
Mm.
something I wanted to bring up is because Joe, like, because things are becoming so expensive, because it's becoming so challenging in an unaffordable market, there's gonna be a lot more people that are pressing pause, going into rent, going into if they can't afford to buy, a lot of areas they have,
Yep.
rent to own situations.
Yep. That's a great point. And
So it
yep.
says people thought they were making down payments on homes. Many Spanish-speaking tenants from Coronado made false promises about English language contracts they signed, which were leases. That's just like scummy.
Yep. Can't do
Um,
that.
it says back in 2018, dozens of people filed complaints with the Dallas County District Attorney's Office about losing thousands of dollars, leading to two indictments. Some reported paying $20,000 for a down
Jeez.
payment or $2,500 for rent, but never received a promised deed to the home. Um, Coronado was arrested 5 years later in 2023. This is in COVID-19 pandemic changes in leadership at the Dallas County District Attorney's Office, turnover among prosecutors, and the number of victims led to multiple delays. After a long wait, a packed courtroom observed Wednesday's proceedings. That she'd accepted a plea deal to serve 7 years in prison. Can you imagine being 73
Wow.
years old and being sentenced to 7 years? 10 years probation, and to compensate the victims. But the court came to a halt when Coronado told the judge she doesn't have the money. $433,900 in restitution, and you can't pay that. She replied, no. Well, the judge says, if you can't pay it, why are you agreeing to be on probation to pay? Great question. The judge said that until Coronado provides a clear answer on how she will pay the money, he would not accept the deal. The court recessed,
Wow.
and the judge gave Coronado and the lawyer until Monday, so on and so forth. Um, Goes on to say that it's not fair to us. This is one of the victims. She said she wants to see a longer prison sentence for Coronado, but feels the proceedings are a step in the right direction. She's accused of first and second degree felony theft involving more than 30 families across the
Wow.
Metroplex. Um, she was scheduled to appear in court in 2024, but was hospitalized after suffering a panic attack upon learning about the media coverage. I think I'd have a panic attack too if I was going to have to spend 7 years in jail.
Well,
But
yeah, and, if you just, like, weren't slimy and sleazy and stole money from people, you wouldn't have to worry about having a panic attack about going to jail. I mean, this is not every once in a while, there's people that especially white collar crime with business where they'll break the law, and there is actually the true potential that they didn't know what they were doing is against the law. This is
yep,
very clearly a situation where this lady was accepting money from people, in the guise of a down payment, which, by the way, if anybody is out there, why you should never pay the real estate agent any
no,
type of
no,
down payment money.
yeah. I mean, it does sound like she definitely is targeting,
Yes.
minorities, right?
Yep. I
And
think you're
taking
exactly
advantage
right.
of them in a big way, which is uh gross and and
Yeah,
and and
disgusting.
sad and all the things. But this is a lesson in reading the fine print, reading the fine print, making sure that if you are going to do a rent to lease, if say you go into a rental, you can't afford to buy a property right now, if the pretense of going into that rental is a rent to lease, say they say, well, you can rent it for $2,500 and, I'll sell it to you. I'll give you credit for, 6 months rent or a year's rent. I'll
Mhm.
take that money off the price of the house. Please, please, please make sure that every
Yep.
detail is in that contract. The other thing that I would say, Joe, that a rental own, a lease to own contract is to make sure that the price is reflective of what the market is at the time of purchase. Now,
And I was gonna say,
you could have a property that is in a market where it's in Dallas, where a
yep.
year ago, 2 years ago, that property was worth
Oof.
more than it is
Yeah,
now.
great question. Great point.
And now the lease contract, you've been paying your rent for 2 years, you're like, "You know what? I am gonna buy this property," and now you're stuck paying the price that's on the lease.
Yeah,
But
that's a great point. That's a great point
100%.
that
But
you just
I'm sorry, go ahead.
that's just one of those things you just have to be careful of. And lease to own is one of those things that it can work, or rent to own, same difference really. But you're exactly right. Anybody who is going to anytime you're in a business deal where it's like, hey, I promise in the future, if I do these things in the future, you're going to do this. And that future is like 6 months, 12 months, 24 months away. You really got to get every little detail in writing. And I'll tell you that between, when it comes to buying, selling, or doing lease to own, the lease to own option is probably the most complicated of them all.
It's
It
super, super complicated. And a lot of
yeah.
people are like, "What's the big deal?" There's so many ways it could go south, and I would
Yep.
add, Joe, if you're thinking about if you were either on the landlord side and maybe you don't need the
Mhm.
equity right away, you don't need the cash out of the property, and you're like, you know what, I just want somebody in it for now, but I don't know that I want to carry it the whole,
Mhm.
and be a long-term landlord. Or on the other side, on the buyer side, where you want to, you're a tenant to begin with, and then you end up purchasing the property. Regardless of the state that you're in, get a real estate attorney that specializes in those types of contracts to
Yep.
look. Pay, it's money worth spent. It's
It
money
is.
worth
Well,
spent
and
to pay to have that legal advice. Try to get a referral from somebody that not just pick somebody
yeah.
I'll date myself here for a second, the yellow pages.
Well, and you're
Even,
right.
you
You might
know,
have to pay a little money, but I bet you if you went to the victims of this agent, the victims of these crimes, and if you said, "Hey, you lost $20,000, would you have been okay paying someone $500 to look over the agreement?" I
yep,
guarantee you, every single one would say absolutely. And you make a good point for that type of thing, for lease to own with a complicated contract. Get an attorney, not a real estate agent, not a title company, not an escrow officer. Just go to a real estate attorney.
100%, 100%. We got a success story in the
Woo!
house. Jody Ford says
Yeah.
sold in Goodyear, Arizona, 60 days. Bought in LaPorte in Indiana on the first day. Bid against others.
Nice.
Yeehaw! And you know what? Thank you so
Congratulations.
much for sharing that, because you know what? That's you know what? I want to say that at the very beginning here. If you guys have any success stories, even if it's just this tiny, like, celebrate your little successes. I always tell my kids that, every little thing you gotta, especially when you're up against a lot of uncertainty, or you're up against a lot of, what's the word I'm looking for here, Mevin, word retrieval, where it's really tough and it's adversity.
Yeah. It was like, I'm
You know,
almost there. Give me some more.
yeah, yeah, yeah. So, if you have that, even the smallest success, it gives you momentum. Um, oh, she's a Mary. If you have a house prep for sale, I strongly recommend. Thanks a lot, Jody. Appreciate that
Look
little
at
shout
that.
out. We got Michael X coming in from Misa. Gosh, you know what?
Hey,
Is it
Michael.
Misa or Mesa? Misa. Somebody
Mesa.
had
Yeah. Mesa,
had.
Arizona.
Is it Mesa? Somebody had
Yep.
actually put the pronunciation in, I think, my last live stream, and I don't remember things
Yeah,
here
Mesa,
sometimes.
Arizona. In fact, I'll
Um,
be I'll be that way this weekend. I'll be out in the greater Phoenix area.
oh, cool.
Yeah.
Very, very cool. And I'm glad that, Mike, you're learning. That makes me happy. That makes me
Yeah.
so happy. All right. Let's talk about foreclosures.
Let's do it. It's a
Let's
very
talk
scary
about
topic, Jen.
foreclosures. It is a scary topic, but you know what? You know what I do when I get scared, when I get uncertain about things? I research, because
Whoa.
the more you know, Joe.
It's
The more
true.
you know. So this came out Saturday. Fast Company. Those have watched my live streams know I like the data that comes out of
Yep.
Fast Company.
Fast Company's
Housing
good.
market shift, foreclosures creeping back up. Now the headline, Joe, foreclosures are up 40% year over year, but they're still 13% below pre-pandemic 2019 levels. Most people will read that first part of the sentence, right?
Yeah, and it's
Uh,
just
it's scary. It sounds scary,
yeah.
right? Let's look at the data. Let's look at what's going on here.
Yeah,
It says
that's a
this week.
great headline to demonstrate too. It's such a perfect headline to demonstrate this.
Yes, absolutely. It says this week, the Federal Reserve Bank of New York published its quarterly household debt and credit report. I actually talked a little bit about this last week when I had Clark, the realtor, on. Um, it shows that while still low, distress is creeping back into the housing market. Here's how the U.S. housing foreclosures of Q1, quarter one of 2025, compare to previous years. So if we scroll down, we can see that we've got Q1 at 61,660,000. 2020 they were at 74,000, but I just want to point out that 2014 144,500. Sounds scary, but relativity is everything, right? 144.
Yep,
2014, the market was rebounding big time from
it
the
was.
crash, from the great financial
Yep.
crisis, 7, 8, 9. We were well on our way to rebounding from those foreclosures. And that was even during a foreclosure moratorium, right?
Mhm.
144,000 compared to 61,000. Not as scary, but all right, let's get into it a little bit more. It says when COVID-19 lockdowns began, um, the federal government implemented a nationwide foreclosure moratorium to protect homeowners from the economic fallout. For those watching, a foreclosure moratorium, what that means is that the banks, in this case, it was done by the federal government, but individual
Yep.
banks can also do this, where they literally press the pause button. You cannot
Yep.
be foreclosed. So if you're 30 days, 90 days, 90 days is the catalyst for most mortgage notes. Would you agree, Joe?
Yeah.
That most on a standard boilerplate note
Yep.
that has a lien against your property, the banks typically have the right to start foreclosure proceedings once you're 90 days late. The moratorium puts a pause button. It doesn't make it go away. It doesn't mean that it's going to be that, late fees still accrue and all the things, but it just means that you can't be kicked out of your house. Can't lose your house. Um, these protections, including forbearance programs, and forbearance is when they do workout program, a specific workout agreement. If you owe a lot of money, and they'll either tie it into the loan or re-amortize the loan, or make it so that you can make it more a little bit more affordable, and so that you don't lose your house. These protections were extended multiple times, and at the same time, a historic surge in housing demand pushed home prices to new highs during the pandemic housing boom, boosting home equity and keeping foreclosure activity unusually low. So they stopped the foreclosure more, whatever foreclosures that were happening, they paused them. And at the same time, you've got equity going through the roof. So even if somebody did have to sell, their values went up high enough so that they could, even though they were late
Yeah.
on the mortgage, they could still sell the property and walk away with a little bit of money.
And that's really
Um,
important to designate. I think a lot of people forget that. A lot of people assume that, oh, you bought a house 4 years ago or 5 years ago, you lost a job, your house is going to get foreclosed. No, that's not the case. Just because someone is on difficult financial times, just because they're late on their mortgage payment, does not mean that it's going to go to foreclosure necessarily. Foreclosure only occurs when the property is worth less than what's owed on it. That is when foreclosure kicks in, and then you have issues with that. So all of these people that could potentially face hard economic times, let's say someone that did buy their home in 2020, 2021, 2022, a lot of the pundits and crash bros will point to these people. Oh, these people that bought in 2021, like they use these small down payments, they don't have equity, they're going to get foreclosed on.
right.
Well, if they put 10% down, the market's gone up. If they lose their job, they can turn around and sell their house before the foreclosure process even begins. So when equity goes up, when the market does really well, it lowers the odds for foreclosures to exist, because people can just say, oh, I can't afford the house anymore. I'm going to sell it and I'm still going to make 200K or 100K or whatever it's going to be.
Yep. 110%. I think that the thing to look out for is, when you're looking at the news, the headlines, the data, you want to look at when they refer to foreclosure starts. Foreclosure starts means that exactly that. They have started the foreclosure process. They're at the very
Yeah.
beginning. A notice was issued. Once
Yes.
a notice is issued, that's a foreclosure start. It doesn't mean the foreclosure was completed. It doesn't mean
Correct.
that it's gone to the end. I have had, several years ago before COVID, I represented banks. I was, for a couple of years, I got burned out on that super fast because they're
Yeah, it's
terrible to
hard.
work with, and representing them on the selling side.
Yeah.
And some of those properties that they put in front of me that they would contact once the banker got to them and they
Yeah.
were ready to actually proceed with they've already taken possession of the property and they finally go get around to selling the property. Some of these properties it takes forever. And some of these
Yeah.
properties they had not officially foreclosed on yet. They were just
Right.
finally after a year ready to do the auction
Yep.
process. Not
And
all
and
banks
that
are like that, but it's like
yeah.
you don't it's not done until it's done. And so you can't
And
assume that.
not to mention that a lot of the times banks will say, if you can get us the money before we go to the foreclosure auction, we'll cancel it. I mean, the banks, it really doesn't do the banks any good to have to foreclose on a property. That's not the business banks are in. Banks want to kick back, sit back, and collect their interest. They're not in the business of taking your house, hiring an agent, trying to get top dollar to sell this house that's been foreclosed on. So there's a lot of things that go into the foreclosure process, and that's why a lot of these sort of doomers or the people that perpetuate the real estate crash myth are going to say, oh, well, see, foreclosures are rising and that's where our inventory is going to come from. And it's like, well, you're under the assumption that all of these homes that are in pre-foreclosure actually go to foreclosure.
Right.
And then you're under the assumption that all of these go into foreclosure and hit the market simultaneously, which
Right.
is not the
Right.
case.
Right. Brandon, real quick success story. Brandon just bought my first home. Pre-approval home search offer inspection
Whoa.
appraisal underwriting and closing in less than 30 days.
Dang.
Woohoo!
Awesome, Brandon.
That's
Congrats. That's
fantastic.
awesome.
Congratulations.
That is
Uh
so cool.
Sydney has a question. Oh, I love how they put question before the question. I gotta start asking people to do that. Are most people who face foreclosure those who might have had relatively small down payments? Actually, Joe, before we answer that, I'm gonna say, Sydney, sit tight because I'm actually gonna get into some data on that on to help answer your question. So before we go down a rabbit hole on that, because there is more to it than just the down payment. Um, short answer is no. Short answer is no. Uh, so getting back to this article, it says recent quarters foreclosures steadily returned, inching closer to pre-pandemic levels. Um, let's see, it says foreclosure rebound picked up the pace following the expiration of the moratorium on foreclosure loans backed by the U.S. Department of Veteran Affairs. So a lot of VA loans were hit pause, and some of it. That's the first answer to your question. It's not necessarily small down payments, although VA loans typically are low to no down payments. But there's more at play here. There's more at play. This is the U.S. foreclosures by quarter. You can see the spike 2009, right? I mean, holy cow.
And look at all those
and
years leading to that, and look where we are. I mean, it's
Well, and
just
that's why I wanted to this is why digging into the data beyond the headlines is so important because
yep.
you got to pull back. You know what I mean? It's like, you're trying to buy a car and you only look at the door. Like, or
Yeah.
whatever, you know what I mean? Like, I don't
Right.
know, probably a better analogy than that, but do you know what I'm saying? Like, you gotta
Yeah.
take 10 steps back, look at the big picture, because this includes a time period when foreclosures, I mean, the market was deplorable. We were at a state, I
Yes,
mean, the whole economy crashed because of the housing market. Worst case scenario, look where it's at. Looks like the Empire State Building. And
it
then
does.
this is where we are right, where we are right now. Yes, little bump up. Are we in danger zone? This is danger zone. This is
Yep.
this I would say the fire alarms don't need to be,
No,
don't to
not
pull
even.
the fire alarm anywhere near close to that
No,
yet.
not even remotely close to that. And I use this analogy all the time. This is like me saying, "Hey Jen, guess what? I doubled my net worth yesterday. I'm twice as wealthy in total as I was yesterday. Yesterday I had $1, today I have $2."
Yeah, no, I was just gonna say I was just
And
gonna
you're
say
like,
that.
"Okay, well great." Like that's great, but you're still, and that's exactly the scenario with this headline when it comes to foreclosures. Foreclosures way up
Yep.
from all-time lows.
Yeah, right, right, and that it's all relative. Um,
Yeah.
the article goes on to say the question heading forward though is will housing foreclosures, and this is what everybody wants to know. They see the
Yeah.
40% and they're like, well, what does that mean? What does that mean heading through the rest of 25 and 26? So it says we're going to get into what the indicators are because the indicators are truly not somebody telling you that foreclosures are crashing the market. That's not an indicator. The indicator is the data. The data and the data that they monitor that are good indicators. It says before US housing foreclosures rise, delinquencies of 90 plus days typically increase. Okay, that makes sense. It says while credit card and auto delinquencies of 90 days or more have surged in recent quarters, delinquency of 90 plus days on household mortgages remain well below pre-pandemic 2019 levels. Now, that in itself is the thing that is, I think, causing a lot of people to like wave the flag because it brings up the issue of household debt. And I'm gonna switch screens here for a second. This is the Federal Bank of New York. This is where the data came from. And I'm actually I'm gonna like get a little bit easier to see here. There we go. So this is the blue is mortgage debt, the red is non-housing debt. The thing that has happened recently to create an overall strain, Joe, and you know this,
Mhm.
is what they're doing with student loans. Credit card
Yeah.
debt has gone up because of inflation. Things cost more. People are like, they want food, they want groceries, they're not willing to sacrifice. I'm gonna hold back on my rant on that. That people are not they want to maintain their lifestyle. Would you agree? And they
Yeah.
would rather go into credit card debt than sacrifice without,
Yeah. Which is
I'm not
foolish,
gonna
but
I'm not gonna go to the movies. I'm not gonna go out to dinner. I'm not gonna replace my iPhone. I'm not gonna buy a bigger TV. I'm gonna just
yeah.
do without for now. And people don't know how to do that. Society has changed and they don't know how to do that. But then you add on the huge burden of, the student loans were paused, right? All the payments were paused. And I'm not, I have mixed feelings about the whole student loan debacle, and students, you go into this knowing you're going to have to pay it back, and all the things. And I think it's also stupid expensive, but those are coming home to roost. And
Yeah.
now those people that went back to school, and we're not talking young kids. There's a lot of people that my sister's fiance, who's in his late 40s, right?
Yep.
He's 50. He's getting his master's or PhD, or I don't know, well, higher level education.
Something,
And
something fancy.
it doesn't have to. It's not just the young folks. And if you have a mortgage on top of it, that's when things get dicey.
Yeah. I'm just glad that more people are aware of the student loan, I don't want to say trap, but just more aware in general of the way that student loans work and the fact that you really got to read that fine print and be aware of what you're
110%.
signing up for.
Um, let's see here. Austin, thank you so much, my friend. We got a super chat at $20. Thank you so much. Man, that is awesome. Thank you so much. He says, Brand, I'm not a doom guru, but devil's advocate. Yes, and if the transaction velocity has already hit lows, counter to seasonality is a big deal, and a lot of people don't pay attention to seasonality. Whereas off-season holiday spending in the housing market or off-season regular household goods spending, maybe I don't know what the cycle is with regular household goods, Joe, in terms of the lowest spending, must be like February, March.
I would
I have
imagine,
to get the data on that, but you have to
yeah,
take that
people
into
recovering.
consideration, right? You can't just have a dip and be like, oh my God, the housing market's tanking and it's January. It's like, no, the
Yeah.
housing market always slows in January.
Yep.
Always, right? So you have to have that seasonality. But he says the markets don't need to see even a marginal influx of foreclosures to cause a huge change in pricing power. 110%. And that's exactly what you were saying, right? You were saying that, you look at that trajectory of the shift, right? I think that's what he's saying is that if you look at that trajectory, like what you were saying, with comparatively
Mhm.
speaking, where we were during the great financial crisis versus now, and we were so ridiculously low. And yes, it's a jump, but compared to what? It's a big jump compared to a ridiculously low foreclosure market, right?
Indeed.
110%. Let's see here. Sydney says, surprised at the answer because it seems like if you put minimal money down, you're likely to have not saved much, and therefore you have limited cash flow for yourself. I plan to put down 75,000. So actually, I'm gonna jump into have a little bit more data on that. Hold on one second to get to that part of the article.
Yeah, I mean, I will say
Uh,
that, by putting down a lower down payment, your down payment's kind of your cushion, your safety net going into home ownership. And
yes.
if you have a smaller down payment, then your safety net is smaller, but it's not directly related to down payment, because you could have had somebody that bought a home 15 years ago, 20 years ago, put a big down payment down, and then maybe they refied and pulled money out, started their loan over, and ran up the balance on their home again. And they go, oh, I had 30% down, 15 years ago, ton of equity, but they made dumb decisions, and now they're in a little bit of a difficult spot with potential foreclosure because they took all the equity and then went to Europe for 6 months.
So that's where I was going with it, actually, Sydney,
I
because
had a feeling my realtor senses were tingling. I was like, I think I know
your
where
spidey
Seth's going with
senses,
this.
you knew. So I'm gonna answer that in a roundabout in a roundabout way. So this article goes on to talk about the recent share of household mortgage balances that are 90 days delinquent compared to previous years. It's not high. It says that on the delinquency front, the most noticeable development this quarter is the student loan delinquency surge to a 5-year high in early 2025, just like I was talking about a minute ago. While the jump was expected after years of artificially low student loan delinquency rates, federal researchers warned of serious consequences for behind student loan borrowers, including damaged credit and reduced access to mortgages and auto loans. According to the New York Fed, super prime U.S. borrowers, those with credit scores above 760 who carry unpaid student loan balances, are expected to see their credit scores drop by an average of 171 points this spring. And that's because student loan delinquencies, which haven't been reported to credit bureaus since the start of the pandemic, are now being reported again. This sudden credit hit could temporarily push borrowers out of the housing market. So I wanted to touch on this because if you are in a situation where you own a house and maybe you put 10% down, maybe you put
Mhm.
75,000 down, and your student loan that was based on the pretense that you could manage your student loan payments at the time, and now these student loan payments have skyrocketed, you didn't plan properly, whatever the case may be, the student loan payments have gone up. You say, oh my gosh, I don't want my credit to be messed with
Mhm.
because it's now affecting my credit. I don't want to lose my, all the things. And you take the money out of the equity. You
Yep.
take the money out, just like you said, Joe, you take your money out of the equity of the house to pay some of this debt
Yeah.
now. And at the same time, you're looking at situations where, now you're maxed out. Now you're maxed out and you're paying the mortgage and the equity loan.
Mhm.
It's a recipe for disaster. So does the bigger down payment help? Oh, of course it does. As long
Mhm.
as you don't touch the equity.
Right. Correct. That's like putting $100 in the piggy bank for a rainy day and saying, oh, look, I've got rainy day savings, but then every day you take $1 out.
Right.
Well, over time, there, you're not going to have the cushion anymore. Now, I will say, obviously, there's some stuff that you can do with refinancing debt to a lower interest rate, interest payment, things like that. If your interest rate on your home is 6%, but the interest rate on your student loans is 10%, well, heck, that might not be a bad thing. But that's going to be one of those things where you have to sit down with a CPA financial advisor, and they're going to have to
Yeah.
run the numbers things, because we're starting to get to a point there, like, if you're trying to juggle mortgage, student loans, a refi, payment, this is a lot of money we're talking about. And if it goes sideways, it's not just going to be like, oh, we'll be okay. So you definitely want to talk to a financial expert whenever you're talking about trying to figure out where to allocate or refinance debt or any of that stuff.
110%. And that's the other thing too, is that we haven't touched base on, is the credit card situation,
Yeah.
which has to do with inflation.
Yes, it
All
does
these things,
directly.
it's all, it's all compounding. If you have, a credit card, your credit card debt has skyrocketed. Now you're not paying the credit card debt, right? Or you're borrowing Peter to pay Paul, which some
Yeah,
people,
and that's exactly what we're seeing. That's exactly
right?
what it is. It's people that are like, I got to have groceries. So
Yep.
what am I going to do?
That's probably the number one thing that, for if you're a new homeowner, and let's see here. Oh gosh, my Brandon. There we go. Just bought your first home. Here is going to be my unsolicited advice, Brandon. The mortgage is the first payment you make. Period. You can live on mac and cheese. You can live
Yep.
without a car. You can live without a lot of things, but you need a roof over your head. You got to pay the mortgage first.
Yep.
First. A lot of people figured that out, learned that lesson the hard way during the great financial crisis when they lost their
Yep.
house, right?
Yep.
Because to
The
your
root
point, they
the
pay the credit card bill for whatever reason, or they're late. They try to move the money around and all the things, and the housing payment typically is often the largest payment, and they put that one off to the last. That's the last payment, and you don't want to do that. Yes, a credit being late on your credit cards is debt is going to ruin your credit, and they could put and will put a lien on your house, so that when you sell the house you have to pay it and all the things, but they can't kick you out of your house.
Yeah.
They can't kick you out of the house if you're late on your credit cards. They can't kick you out of the house if you're late on your student loan. Now, one of the things that they're doing now, Joe, is they are garnishing wages on student loans. Not to go down that rabbit hole, but
Yeah.
they're doing a lot of things on student loans, which on the federal side, right? These are federal student loans, not obviously private loans, student loans. But
Yeah.
but they can't kick you out of your house. The only way you lose your house is if you don't make the payment. So please, please, please make the payment. But
Yep.
this is from 2005. I thought this was interesting because you can see. But here, look at this, Joe. So like student loans, huge spike. We talked about that. Credit cards,
Yep.
big spike. Auto, which is interesting because auto prices went through the roof during
Yep.
COVID, right? The auto industry, it's changing a bit. I feel
It is.
like there's a little bit of a surge. So those watching may recall, it may or may not recall. I mentioned it last week. My daughter got into a pretty serious car accident on Easter. As she had angels in the car. I believe in angels, and there were angels in the car because she walked away, without a scratch, which I still don't understand. She rolled her car, and it was destroyed, completely totaled. We were so lucky. I'm lucky. Very, oh my goodness, so grateful I didn't lose my daughter. But we had to buy another car, and the number of used cars, Joe, I was like, there's a lot, and I think people are trying to trade in their cars and get the new cars now, maybe before the prices go
Yeah.
up and tariffs and all the things.
Heard of that.
But
Yeah. Heard that theory.
but the thing is that the auto delays, the auto late payments are not significant. And you look down the bottom where the HELOC and mortgages, and they're just like a little bloop.
Yeah.
Again, 2009, significant, big time
Yeah.
significant. But this is where we're at. So, why are they being foreclosed on? Well, people lose jobs. Things happen, Joe, right?
Oh,
Things
for
happen
sure.
in
It's life.
life. Your spouse dies, passes away, and they were the breadwinner.
Yep.
You lose your job. You get laid off.
Yeah.
Maybe you're a federal worker. You get laid off.
Yeah. Medical
I
bill.
mean,
Maybe somebody gets sick. I mean, heaven forbid somebody gets sick and doesn't have health insurance. I mean, that's a great way to go into more debt than you can even fathom faster than it could happen.
well, or getting sick and not having any reserves,
Yep.
right?
That's
Not
yeah.
having any
Yeah.
reserves whatsoever to even cover the day to day. That stuff, that can multiply, substantially. But is that a reflection on the housing market, I
Right.
don't know that it is, because the one thing that I've noticed, over the last 5 years, I've noticed larger down payments.
Yeah.
I've noticed that when we came out of the great financial crisis, you could, buying a house with no money down, buying a house
Oh,
with,
no
very
job, you
little,
buy a house.
I mean, it was easy, right? Fast forward, those programs, some of them still exist, the no money down programs, but I haven't seen the typical home buyers not, from what I've seen. I have to look into the data. I have to look into the
Mhm.
data. But for the most part, I'm not seeing that 3%, 3.5% low down payment like we're seeing here. Sydney's, putting down, $75,000.
Mhm.
We've got, the down payment. I'd be curious to see if anybody else is getting ready to buy a house here, and they have large down payments, if you don't mind sharing it, just to see, get a poll going here. But I don't know. What do you think? What are your thoughts?
I certainly have seen the same kind of the same stuff. I haven't written. I wrote one offer recently that had a 3% down payment, and I actually think they might have bumped it to 5%. And the reason they went with 5% is because they had an existing home that they wanted to keep and use as an investment property, and then buy the next.
Interesting.
And so that one, I was like, okay, this makes sense because you have equity in the other home, and that other home is going to cash flow positive because their payment is much lower than the potential rent that they could get. So in that
Wow.
scenario, I was like, okay, this I can understand. You're not just coming in by the skin on your teeth. Yeah, you're coming in by the skin on your teeth on this home,
There's no
but it's
skin
for
on teeth. Where does that saying come
I don't
from?
know.
That's
I don't know where
ridiculous. Skin,
that is.
seat of your pants, coming in by the seat of your pants, maybe.
Yeah, there you go. Yeah, the skin on your nose.
Sorry,
That one's a
I
little bit better.
digress.
But in that situation, I was like, okay, this I can understand what you're doing here. You have a low down payment, but you still have high equity in real estate from another property that you own. So that's a little bit different than someone just coming in saying, hey, I've got 14 grand, it's 3% exactly. Get
Right,
me in a house,
right.
and get me out of my apartment. It's a little bit different.
100% agree. Sydney says aiming for a small ranch in the Finger Lakes in New York. 200 and 200,000 to 250. I love that you can still, that those properties are out there in that area.
Yeah.
That's legit. Got Clark in the house.
Hey,
Hello there,
Clark.
Mr. Clark. Always, hey, you know what? He always pops in. We got a new viewer. We got somebody new in the house. We got a new subscriber here. Thank you so much. I hit the like button. Great
Welcome.
content. Woohoo! Really appreciate you. It says I was reading in 2024 there should have been 54,000 foreclosures, and there was only 9 because of forbearance. Yes, and the
Wait, hold
moratorium,
on.
the foreclosure
Hold on.
moratorium.
This, you're telling me that a headline was incorrect about something? No way. There was
Well,
supposed
no,
to
I
be
mean, I think it's,
54,000 and there's 9.
yeah, right, right. No, and that's true. I mean, they pressed the pause button, and that's why a lot of these things are, and I think that's why we're seeing a little bit of a bloop,
That's exactly why.
because it's just people that are like,
And
opening the floodgates,
and these
um
were the buyers that were kind of on the cusp to begin with, and they would have been on the cusp of foreclosure with COVID or not, or whatever their deal was. And then they got forbearance. They said, "Oh, we can hold on a little bit longer. We can claw back a little bit longer." And then forbearance ended, and those are the
yeah, and
numbers that we're seeing.
unfortunately too, and this is not a broad sweeping statement. I can't stand broad sweeping statements. I see that a lot sometimes in the comments. Folks will say, "Well, there's no inventory problem." Well, there may not be an inventory problem in your area,
Yes.
but there are in
Right.
other. And so I don't want to make a broad, sweeping, statement about, having the foreclosure. Or I lost my train of thought of what I was going to say.
No, but
Um,
you're right, you're right, and the theory is still true because for the last 5 years, we've been operating, and I've said this before, we've talked about this. In the last 5 years, we have been able to talk about the real estate market as a general sweeping statement in the United States.
true.
Because for the last 5 years, it's been hot, seller's market, high interest rates, buyer screwed. There you go. If you just came out of a time
The show's
capsule.
over, folks. That's it.
You'd be
That's
like, "I'm
it.
caught up." And now what's happening is that that's not the case anymore. We're getting to a point again where exactly what you just said is so important to remember, that real estate is hyper local. I mean, gosh, you ever looked at a recent inventory map? You can tell right where the sun belt is. There's a line that goes
Yep.
across. And if you're below it, you've got more inventory coming out of your ears and you know what to do with. And if you're above it, like our good friend Jackie in New Jersey, good freaking luck buying a
Right.
house. So
110%.
it really makes a difference on where you are talking about.
Austin says, I am seeing more inventory than typical in most markets now. A greater 8 percentage of the inventory is coming in at the bottom of each respective market, aka buys may have more, oh, buyers probably may have more
Yeah,
power now. Yeah, and we're starting to see
that's true.
that come in as more data is coming in, and that you're seeing some of those headlines. And again, with the sweeping statements, buyers have the power. It's a buyer's market. It's a buyer's market. Not everywhere.
Yeah,
Not
yeah,
everywhere.
and I think the important thing
Uh,
to remember is we are getting some increase in inventory in some markets, and
yep,
we are getting waning demand in some markets. And in
correct.
those markets where those two things converge, buyers will have a little bit more of a chance.
Sydney says, luckily I'm completely debt free. Good for you. Yeah, I'm very allergic to debt after getting some war wounds from the great financial crisis. Bubby Landia, hey, good to see you. Student loans due, home and car insurance rising. Federal Home Energy Assistance Program was cut. Likely cuts to Medicaid coming. Maybe, maybe not. Future medical bankruptcies. Thus, foreclosures could rise in 2026. Yeah, I mean, if you look at it from a potential perfect storm, I
Mhm.
mean, anything's possible, right?
Yeah,
But the question is, on all of those things, anything could happen. And that's why it's dangerous, I think, to predict and make plans based on forecasting, because all of those things either may change or not come to fruition. Medicaid may not be cut, which means there won't be medical bankruptcies. We could have, a different program for federal home energy assistance. It could be something that comes in. You never know. That's all I'm saying.
yeah,
You never
yeah,
know
yeah,
what may transpire. And you don't know. I mean, the Small Business Association, and from the federal government standpoint, is taking over the student loan department. And again, we're only talking federal loans here. We're only talking about federal loans. We're not talking about all the private student loans. They may end up reacting to the fact that so many Americans are being negatively impacted on this.
yeah,
um I mean, let's be honest. it, you know from a standpoint, from a political standpoint, doesn't matter left or right, doesn't matter where you
yeah.
stand. When you start heading into mid-term, things change.
Things
And if
change.
if yeah, right, it doesn't matter. It doesn't matter if it's Democrats or Republicans in the House. Doesn't
Nope.
it doesn't matter if they
The
start
goal's
heading
the
into
same.
midterms
Your
and
votes.
things aren't, and you have consumer confidence is in the toilet, and people are struggling like crazy on these student loans and all the things. That you don't want the general public to be
No.
unhappy.
No.
So you put some policies out to try
Yeah,
to
that's a
try to
great point.
right the ship. That's
Yep.
all I'm saying.
Good point,
That's
Jen.
all. I just,
Yeah.
that's my
And I think,
two
and
cents.
to Bubbles' comment too, those are good observations. That they're not incorrect. All of those things could happen, like you said, Jen. But again, you take something like this, which I think that Bubble Landia's mentality in this comment, and please correct me if I'm mistaken, but if Bubble Landia has a very that's a thought process that I
You
think a
like to
lot
just
of
say
people
that
have.
handle, don't you? You just like to say Bubblelandia.
I do, yeah.
It's fun to say. Sorry, go
I
ahead.
think I think that their thought process is correct, and a lot of people would see that. A lot of people would go, student loans due, home insurance more expensive, cars more expensive,
Oh, oh, oh,
federal, all this
oh,
stuff, all this
oh.
stuff. There are going to be foreclosures. No, let's keep in mind that foreclosures only hit people that are upside down on their home. So even if all those things happen to someone, if they still have $300,000 worth of equity or even $150,000 worth of equity, and they realize, oh, I've got these other problems, they can sell them. And
You
it's
bring
not
up a great point.
necessarily a foreclosure.
You bring up a great point, Joe, because if you're talking about Medicaid, right? That is only, you have to, I mean, unless you're under, correct me if I'm wrong, unless you're under disability, you have to be of a certain age. You have to be in retirement age to qualify for Medicaid, I believe, right?
Yes, you have to be over. I think over 60 or 62 or
Okay.
58, something like that.
So if we were to generalize that it's the boomer generation typically, not all, but typically they've been in their homes longer. Those are the ones that have
Yep.
I remember it was like $4 trillion in equity across the
Yep.
country.
Roughly 4 trillion.
Those are
Yeah.
the ones that are going to
Mhm.
be the best situated to deal with that if it comes down the pipe.
That's true.
Rebecca says
Great point.
totally pay the first mortgage. Amen.
Yep.
JM says, yeah, used cars went crazy. Paid 73.50 for my 2011 Prius in 2018. Needed a new one. The same 2011 was going for 10,000 or more. 6 years later, I saw the same thing. I actually got my daughter had a 2016 Nissan Versa Note, a subcompact, and I'm telling you, this thing had a high safety record, rating, and boy, we proved that right. So I bought her. I wanted to get her the same car, a couple of years newer, and I was shocked. Like the price is like, I mean, I bought it for $9,500 almost 2 years ago, right? And I literally got, I think the insurance company gave me over $8,000
Yeah.
on a used car. I
Yeah.
mean, I just was like, I was floored. I was absolutely floored. So it's just, it's a little bonkers. Let's see here. Let's see here. Yes, it is a blessing that she is okay. I can't believe it. Um, Russell says I wanted to go above 3%, but it was going to bump my interest rate higher in my situation. And that's a strategy. That's the thing is that I think that when you're looking at down payments and you're looking at your situation, you
Yeah.
can't go by this article says it's a mistake, that
Yep. Great
YouTuber
point.
says it's a mistake. You cannot do it because everyone's situation is unique. I actually so the video I did last week was on capital gains. And
Yeah.
Joe, I put it right in the beginning. I am not a CPA, I am not an accountant. This is a vague overview. And of
Yeah.
course I got some comments like, "Oh, you forgot this, you forgot that." And I'm like, "Yes, I did on purpose because I'm
Yeah.
not a
Because you need to go
CPA
talk to an
and I'm not an
accountant for that
accountant."
type of stuff.
And as a side note, you know that as a real estate agent, I could actually lose my license if
Yep.
I am accused of impersonating one,
Yep.
another professional that requires a license. So in
No
any event,
legal, no financial, none of that.
exactly. But, nonetheless, there were a ton of comments about, well, what if this and what if this and what if this and what if this? And I don't have, and I'm not going to answer, just if you post a comment on that capital gains video, I'm not ignoring you. I can't, I'm not equipped to answer the particulars because everyone's situation is so different. It's not black and white. It's
Yep.
not black and white. It's not, every situation is going to be a little bit, the nuances are going to be different.
Yeah.
Um, Let's see, Jim says that's Medicare. Medicaid is for low income. Thank you for that.
Yeah.
I'm not
Thank you
up
for
on
the
the
clarification.
medical insurance. Massachusetts, we are required to have insurance in Massachusetts, health insurance. Everybody has to have health insurance in Massachusetts. So I don't know. I'm not familiar with like options with what happens if you don't. You know what I mean? Um, oh yeah, Wandering Wobble says that's Medicare age 65. Medicaid is to help low income. Oh, okay, okay, then that makes sense. Gotcha, gotcha, gotcha. Bubbliana says, I want to buy a fixer upper distressed property all cash for the first time in a long time. I'm starting to see many more potential homes I like at a place I can afford, and I'm so happy. This is a
Awesome.
great segue for an article I have. I love it when a plan comes together. So the foreclosures, like what you were just saying, Joe. What were you just saying? That location, location, location. You gotta like it's
Yep.
all area specific, right?
Yep.
So, actually, you know what? I'm gonna mix things up. I'm actually gonna skip to this first, and then I'll go back to the other one because this is the foreclosure rates. This was May 16th, so that last week. This is foreclosure rates by state. Excuse me. Foreclosure rates by state, April 2025. This says it all in terms of where things, where the, where the top 10 are, which is what's interesting, Joe, is it's not all in the southern regions.
No.
Texas isn't even in the top 10.
Yeah.
Texas, not even. Nevada, number 5. Connecticut, number 9. Connecticut ahead of Texas, which I thought was interesting.
That is interesting. Yeah.
Very interesting. Again, if the one thing that we're trying to hit home here, I think we both agree on, is that foreclosures are not, it's not a standalone situation. It's, you can't
Right.
afford to pay your mortgage,
It's
and then
yeah.
it's like compounding,
It's a whole
inflation,
thing.
hit
Yeah.
all the things, right? Unemployment. Unemployment. People are getting, some people, there are a lot of people getting laid off that cannot find jobs that pay the equivalent amount. There are jobs out there. I actually dug up some research about a month ago, on one of my live streams, and it was the Association of Manufacturing Workers, Manufacturing Workers Association. So it's a trade group for manufacturing. And
Hmm.
at the time, again, it was about a month ago, there were 500,000 manufacturing jobs available in the country. 500,000. 500,000. However, something tells me that those $500,000, 500,000 jobs are not making it possible for people to pay their bills. Otherwise, they
Yeah.
wouldn't be available. They would be gone.
Yep.
People would be taking them. People would be filling the
Yeah.
slots. But the
Yep.
problem is these manufacturing jobs are not paying enough for people to live and pay their mortgage, pay their rent, pay their bills,
Hmm.
so they stay open. So it could, all these different factors, right?
Yeah. Yeah. Yeah.
South Carolina was number 1, which was interesting. Number 3, Florida. You would think Florida and Texas would be 1 or 2, but that's not the case. Alabama, Louisiana, Illinois, Indiana, and Ohio. But I wanted this map to show where the hotspots were. I thought was super interesting. And then Delaware, one in 2000, 2,617.
Yeah.
Um,
Interesting.
I thought that was very, very, very interesting. But I'm going to
Yeah.
jump back over to that realtor.com article, because it says 2 southern states lead the U.S. in the highest number of foreclosures. Again, it says an article from last week. It says 3 states with the highest number of foreclosures, 2 of them might surprise you. The report revealed that South Carolina, we just saw that in 2 seconds ago, South Carolina, Illinois, and Florida had the worst foreclosure rates in the nation, while Florida, with its triple whammy, I love that word, whammy, whammy, with its triple whammy of skyrocketing HOA dues, insurance rates, and property taxes, may predictably be the place where homeowners are finding themselves underwater on their mortgage. South Carolina and Illinois are a bit more unexpected.
Yeah.
It says high foreclosure rates are typically influenced by a range of factors. We're talking about that, including economic pressure, so on and so forth. It says of the 3 states, only Florida, with a median homeless price of $440,000, is above the essentially static national median at 431,250. That's
Wow.
very interesting. That the 2 of the 3 are below the median home price in the country.
Yeah. That is. Yeah. That's an interesting little detail.
Um, it says, however, Illinois appeared on the Adams recent list of housing markets facing greater risk of downturns derived from gaps in affordability, underwater mortgages, foreclosures, and unemployment. The report revealed that 2/3 of the 50 countries around the U.S. considered most exposed to potential fallbacks were California, Florida, Illinois, and the New York City region. I thought that was very, I was very surprised about that. It says South
Yeah.
Carolina, 1 in every 2,311 housing units with a foreclosure filing. Illinois is 1 in 2,405. Florida, 1 in 2,526. And rounding out the top 5 were Delaware and Nevada.
Interesting. Delaware and Connecticut are a surprise to me. And
Well,
I don't
yeah,
know.
because I agree. I totally agree, because Delaware is like hot to trot right now.
It
There's a lot of
is.
people
It
buying
is.
in
And my
Delaware.
only thought is maybe that, and I know like if it's anything like New Jersey, and I believe Delaware is the same way. Where's Jackie Baker when you need her? But I believe that both Delaware and New Jersey and possibly Connecticut have some pretty wild real estate taxes and property
They
taxes.
110%,
And
110%.
I wonder if that factors into any of this potential, foreclosure data or anything like that. Florida is interesting. I'm not surprised with Florida because um, Florida is the unique market where you're going to have a problem. Even if you've got good equity, you could still face some issues with foreclosure because you have insurance and HOA and natural disasters. And if you can't find someone to buy your house, that could lead to foreclosure depending on your financial makeup, right? I just got done telling you about how, if you've got good equity, you probably are
Yep.
not going to face a foreclosure. But if you have good equity, put the home on the market, but then nobody wants to buy it. And then you can continue to have these uh, uh, this downward economic pressure on your situation. Well, then you might teeter into foreclosure at some point. So Florida makes a little bit more sense to me.
The other thing to take into consideration to play, the other side, the other flip side of the coin, right, is when you have debt that is leveraged against your home. Your taxes are so high you haven't been able to pay them. You
Yep.
live in Florida, and the condo association has
Yep.
levied a $50,000 special assessment that you have not paid.
Right.
You got work done on your house to tune of $50,000 you have not paid. When you have all those liens sitting there, when you go to sell, they
Yeah.
come calling, and that
Yep. Sure.
could wipe out any equity that you
Yeah.
have. You say, I have $150,000 worth of equity after all my selling expenses, but
Yep.
I've got $150,000 of liens. So why do I even want to go through the process of and the embarrassment of having my house foreclosed? I'm just
Yeah.
gonna I'm just gonna do either a deed in lieu of foreclosure, which basically means you mail the keys to the bank,
Yeah. Just give the house back.
just give the house back, or just walk away,
Yeah.
because those things cancel each other out. So it's something to consider as well, because you figure, like, if people are self-insuring, and I wonder if the reason why California, I mean, we know California's prices are leading, they're right at the top 3, top 4 for the country, but I wonder if natural disasters plays into that, where you have people that are just like, maybe they were self-insured, and they or whatever. I mean, well, if they had a mortgage, they would have insurance, but just I wonder if that has any play in it. I
Yeah.
wonder.
I
You know what I
think I
mean?
think so. I think so. I think
Mm.
the insurance thing for California, and I think that's why they're saying, oh, like we need to keep an eye on California. It's not there yet, but it could be. And we're about to go through some pretty significant insurance increases. We are, which are going to come down the pike. We already know that State Farm was granted a 23% increase or something like that in their rates. So that's going to be significant. And
Ouch.
I think what it is, it's recency bias, right? Like we just had a major, huge, insanely incomprehensible disaster that we're still. I mean, it's crazy. I know that the fire coverage is not on the major news media cycle anymore because you only got about 3 or 4 days until the national news media is like, nope, we're over you. But I still see it on the news every day, and it's still an insane scenario and situation. And I think that a lot of people are kind of, that's fresh in people's minds, and and I think that is causing some of these, sort of financial real estate mortgage housing experts to go, we need to keep our eye on what's going on in California because this thing just happened. And goof, if something like that happens again in quick succession, there's
Right.
going to be issues with liquidity and being able to pay people or reimburse people for losses and rebuild.
Well, I 100% agree with you, and I also agree that the headlines, because right now the headlines that I'm seeing are all centered around, are we prepared for the hurricane season? So they're switching gears. They're looking
Yeah,
at they're gearing up for the hurricane season. They've moved on from forest fires.
from fire season. Yeah.
Oh my god. Oh my goodness.
Yep.
um Rob says that, speaking of hot markets, Syracuse, New York. I made offers on 12 homes in the last year there. All offers were well over asking. Really? Some as much as 100,000 to 200,000 over asking with no contingencies. I got none. What?
Oof. Rob. Ouch. Dang.
Holy cow. I actually lived up in near Oswego, New York for a couple of years. Um, I did not realize. I mean, Syracuse does have that is a university town. So it does make it desirable, right? Syracuse
God,
University, right? But still,
200K over with no contingencies here, and it's not.
Jackie's not the only one with
That's
markets that
frustrating,
are
Rob.
absolutely bonkers, right?
Very frustrating.
And this is the thing that that's why the broad statement of Mar the difference between 2008, 2007, and now is it was broad reaching.
Yep.
Because right? Because the lenders across the country were m basically doing these unscrupulous, lending practices. Didn't matter
Yep.
if you were in California, if you're in Texas, if you're in Florida, you're in Illinois, you're in New York,
Yep.
you had this lender, nationwide lenders that were like, "Okay, you know what? You want a no doc verification loan," which means they don't
Yeah.
check anything. You got
Yeah.
it. You
It
got
was
it.
basically just how
Across the
much money do
country,
you
didn't
want?
matter what market you're in.
Yeah.
Didn't matter.
Just tell us how much money you need. We'll get it to you.
We'll get it to you. Now is different.
Oh yeah.
Now it's different. It's unaffordable for sure, but not enough to, have a correction. I think there will be corrections in certain markets. I think the corrections have
Totally.
already started
Yeah.
in certain markets,
Yeah.
but not broad sweeping.
No, I agree. And I really do think, again, we've talked about this before. We need a price corrections are not a bad thing. Increase in inventory is not a bad thing. It's so interesting where we're at right now with the real estate cycle and the way that people react to real estate news is
Yep.
because the moment that a stat comes out that says, "Oh, guess what? Inventory went up 3% in this area." People are like, "Oh, see, housing crash. Here comes the inventory." And it's like, "No, but we have been begging for inventory for 4 years."
Right.
Inventory is good. It is not
Right.
bad. Inventory
Right.
is good. That's how we get price stabilization. That's how we get affordability up. That's what we need. So it's just very interesting right now. We're in such a cycle where because of the GFC, because of COVID, because of what interest rates did, the whole real estate news thing, people are just very knee-jerk reaction, and people need to realize that an increase in inventory is a good thing for pretty much everyone, for buyers, for sellers, for the economy. We need stability. And the only way we're going to get stability in real estate pricing and real estate transactions
Yep.
is if we have more inventory and stable rates. That's it.
110%. And so, if you're out there, you're reading the headlines or you're seeing comments on YouTube or anywhere, Reddit or whatnot, and you start seeing this, people saying, "Oh, there's plenty of houses, there's plenty of houses, there's just, there it's all, BS, that there's, I don't know what anybody's talking about." Here's the data. This is a melting pot. This is everything, right? This is the US
Yep.
housing market combined, everything
Uh-huh.
across the board. But we're still, yes, it's rising, but guess what? We got a ways to go. We need over 1.4 million homes to even get back to where we were in January 7, 2017. In
And keep in
2017,
mind,
we were still in a seller's market
we
2017,
were,
Joe.
we
We
were.
were
And keep
still
in
in a
mind,
seller's market. Buyer demand was higher than inventory at 1.4 million homes. And as of April, we're inching closer. We've got 959,000. Why are home prices rising in Syracuse? Why are people overbidding in New Jersey, Massachusetts?
yeah,
100%. This is
right there on the
why.
screen. Yep.
Because the number of people that are putting their houses on the market doesn't cancel out the number of buyers. And if you think that the buyers that are out there are not going to buy, think again.
Unless, I
Because
mean,
if
yeah,
they're
you
if the
want to choose
buyers
to
are
be
sitting
homeless.
back not wanting to buy, Joe,
Yeah.
right? Then why do they sell for over asking when these properties go on the market?
Well, and that's what I was going to say is another factor to consider is when we're looking at inventory is we got to look at demographics, and demographics are like an iceberg. They're like a glacier. They don't yield to anyone. A
Right.
glacier will move bedrock, the earth crust right out of the way.
Yep.
Later, see ya. It'll do it very slowly, but it's the type of thing that has a massive amount of energy, and that's the same way demographics are. And guess what? I got news for you. Do we have more people now uh, than today as a population, or do we have more in 2017? We got more people right now today between immigration and birth rate. And now is
And and
every
and,
is
and
every immigrant buying a house? No, but it's more people that requires more housing.
and the new administration is just announced they're going to be giving was it giving babies $1,000 when they're born. They're going to be handing out money to I don't know if this will actually come to fruition, but they're encouraging more
Trying to get the birth rate up.
babies. They're
Yep.
encouraging more population growth.
Yep. Well, that's how capitalism it perpetuates. Is you got to have more people to fill the funnel. So
More people to buy iPhones. More people
yeah,
to buy
that's
cars, I
exactly
guess.
it.
That's what it
It's so
amounts to.
sad but true.
We're gonna they were talking about, changing the work week and all the things. It's like, no, we probably work more, longer,
Yeah.
retire 65, 62, 65. I won't be retired until I'm in my probably I'll be doing this for a long time.
Oh, we'll be Jen. I got news. We're gonna be live streaming together for a
YouTube, I'm not going anywhere.
long time.
Uh, I'm gonna be 85 and 90. So this is
I'm,
what happened on the
yeah,
housing
I'm gonna have to
market
start.
this
I'm gonna have to
week.
start reading you the comments because you won't be able to see them. I'll be like, Jen, here, let me read them to you.
Back in my day, you could buy an iPhone for $1,200.
Yeah.
Um, this just so I get jump back to this real quick. It says that the South Carolina's median homeless price was less than the national at 369,000. Many factors go into the foreclosures besides the home price. It says the ongoing rise in home prices around much of the nation have has outpaced most wage gains around the country to varying degrees. And I've been talking about that for a while.
Yep.
It says that has led to home ownership costs consuming more than triple the portion of average wages in some parts of the country compared to others. Similar disparities can be found in several other measures: unemployment rates, the level of homeowners facing foreclosure, and the portion owing on their mortgages than their homes are worth. So I'm going to go on my own PSA now, or not even a PSA, but I have strong feelings about this. We don't need more jobs. We need better paying jobs. We need to change what's happening in the school system to encourage kids to get into the trades. If you're in the trades are paying good money. Why?
Yep.
Because there's not enough people doing it. There's not
Yep.
enough plumbers, there's not enough electricians, there's not enough welders, there's not enough, carpenters, framers. There isn't anybody, there isn't enough people doing it and making enough money to pay these bills. I think a lot, correct me, let me know what you think, Joe, but like I think that a lot of these kids are graduating college, they got their degree, they're going off, they're getting a job, and they're making a fraction of what they could be making if they were in the trades. They
Yeah.
can't afford this,
Plus
right?
debt.
Now, of course, I'm not talking to like the someone my age, my mid 50s or 60s, like, I'm not going out and study. I'm gonna be an electrician or something like that. You know what I
Right.
mean?
Right.
So that's a different story. I
Yeah.
do on the flip side, and this came up as a couple comments on my capital gains video, Joe. I do agree that the capital gains situation needs to be either completely deleted, removed, or revamped.
Yes.
I think
Yep.
that
I agree.
it will be the reason. It is the reason why a lot of people don't sell, because they're
Yes.
like, oh, you mean
Yes.
I'm going to sell? I'm going to actually have to pay the government 25, $30,000 in
Yes.
taxes? What?
Yes.
What?
And for no reason, just because the market went up and you bought the home a long time ago, now all of a sudden, you've got to pay. And not to mention, And this is why I think personally the federal government needs to wisen up, and they need to do this based on a geographic region or by market, because but that would be too complicated for the federal government to figure out. It would be. They're just like,
I
no, this is too
concur.
much work.
I
We're not doing
concur.
it. Because a 500, no, let's just take, we're talking about a married couple, $500,000 exemption
Yep.
on real estate for a married couple. Okay, I got news. My mom, if she ever sells her house in her LA suburb in Laverne, California, that was a very modest price, but she's been there for 30 years, she's paying the government a ton of money.
If
A
she's in a house
ton.
for 30 years in California, oh, heck yeah. Unless
That's what
she
I mean.
has
And
made a ton of renovations that she can
not
bring the
enough to
cost
offset.
basis down.
Yeah, not enough to offset. And that's the thing is, the those types of people. And I've talked to my mom, and she goes, "Yeah, like I might move, but between capital gains tax and the fact that my house still serves me fine, I'm not moving, and it's keeping people in place." In California, the capital gains tax. I know it's going to sound crazy to people that are not used to California or maybe from California. The capital gains tax in California for a married couple needs to be $1 million, a minimum. That's what
Yeah.
it needs to be, because for a lot of elderly couples, that is 500,000, you'll hit it like that.
Yeah,
Like that.
I think you just hit the nail on the head. You gotta make that capital gains, you've gotta this country doesn't take care of our elders. This
No,
country
no.
does not take care of our elders. They should be given tax breaks. They've worked their whole lives. They've served
Yep.
various armed services and all the things, and now you're taxing up the wazoo because they
Yeah.
were part of the American dream.
Well, and get this, and get this. So now some of these older Americans, they're only facing a $250,000 exemption on real estate capital gains tax, which is piddly.
Yep.
And I mean, some homes went up 250K in 2 years because of the pandemic. So
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 you bring up a great point. Okay, I'm divorced. I've been divorced 3 years. So unless I meet someone, if Pedro Pascal walked into my house tomorrow, yeehaw, I'd be very happy. Very happy lady. He's single. I'm single. Unless that happens, that means that I've been in my house 25 years. I'm going to take it on the chin because I'm only going to get the single exemption.
correct.
But I was married
Yep.
for 22 of the years. And this is where I don't know the law. I don't know this. I don't know the laws with the capital gains and if that's even a factor. I was married for 23 years while I paid my mortgage. But now, as soon as you reach that 2 year period when you're after your divorce, forget it. Now you're back to single exemption.
Yeah, no, you're exactly right. This is so crazy that I have a client right now that I'm talking to. He's been in his house since 2002 here in Claremont. Tons of equity, loads of equity, uh, uh, over $500,000 worth of equity, and he, has a wife, but they're not married. They've been together for like 35 years, but they just never did the marriage thing. And I looked at him. I said, "Well, before you sell the house, you might want to think about putting a ring on it because
Well,
it's gonna
that's you know
double your
what? You just
exemption."
brought up a so here's the thing, and this is the one thing that when I was researching for that video, the one thing that is very interesting is that both spouses have to live in the house 2 of the last 5 years. So that means that if you marry, say they do get married, that husband now you have to wait another 2 years.
Correct.
It can't be, "Oh, we're gonna put the house on the market, we're gonna get married on Sunday and put the house on the market on Wednesday and get the
Correct.
$500,000 exemption." No.
Correct.
That
Yep.
we've gotta wait at least an additional 2 years so that the spouse now is seasoned and has been living in
Yep.
that property as your primary property for 2
Yep.
years in order to
Yep.
take advantage of that
Yeah.
500,000, which is
Yeah.
crazy.
It is
Which is the
crazy.
whole
It is
thing is
crazy.
nuts. The whole thing is
Yep.
ridiculous.
Yep.
Um, let's see. Bubba Landis says, I know that Illinois can have some steep property taxes. And JM says, Amen. It's not that people don't want to work, people aren't willing to work a terrible job for terrible pay. That,
Precisely.
that is exactly
Mhm.
what I'm talking about. And that is the problem. I mean, this administration does not understand. The administration thinks they're going to bring jobs. We don't need more jobs. We need better paying jobs. We need better paying jobs. And I was totally off topic from the foreclosures, but I just thought it was interesting. I was watching an interview that from Tim Cook at Apple,
Oh,
and
yeah.
when the beginning of the tariffs thing, he started pulling people over, and are started to react to potentially, you know, because they get a lot of their phones are coming from
Yeah.
China,
China.
and he says not that he says um we don't buy from China because they're cheap in itself. It's it's how they can efficiently run their process, okay? Run their process. So their manufacturing process. So what he meant, he says, if I needed, I forget what he said, some the specific type of engineer, right? Is if I needed this type of engineer in China, he says I could fill this auditorium. Here in the US, I'd be lucky if I get 10 people.
Yeah.
That's a problem. So it's
Yeah.
not just the manufacturing. We need it's not just the increased pay. We need training to accompany that. We need training that is not on the employee's dime to help them prepare for the better paying jobs, or it's never going to work. Do you know what I'm saying?
Yep.
I thought that was fascinating. I thought that was fascinating
Yeah.
because I didn't think of that way. He says, we are they're it's not that they're, be able to do this. They have engineers that are able to work the machines. It's not that they're taking this, $50 pen and creating it for 10 cents. It's that they've got machines that can do it. And the machines are the ones that are keeping the cost down. And they have people that know how to run the machines.
Yeah.
And we don't. Not yet. And that's the thing that is the big linchpin,
Yeah.
you know? Um, let's see. So Maddie says that you aren't required to be married. The
Hmm.
exemption essentially 250,000 per person with a 2-year requirement on both people. Yeah, I don't. I'm not. All I'm gonna say is what I read with the IRS, what the IRS publication had listed. That's what I read. But at the end of the day, I would, I'll take your word for it.
I wouldn't be surprised if there's some loophole. I've always and hey, Maddie, thanks for stopping by the way. She's from
You're
my
so
stream.
polite,
Right? You
Joe.
probably saw me from your stream, but Maddie's a regular on my channel. So hey, Maddie.
Oh, cool.
Um, and I've always heard that you had to be married, but I would not be surprised if there is some tax loophole somewhere that if you know the right thing and know the right form to file and know the correct handshake, you can
To
you can take advantage of it. I wouldn't be
do
surprised.
the hokey pokey and then turn yourself around.
Right.
Bubbalini says that what I've seen with the trades is that physical labor and the current medical system usually don't mix well over time. Yeah, I think everything needs to be. It's gonna take decades, Joe.
Yeah.
It's gonna
Yeah.
take that.
That's a great point
Excuse
that
me.
Bubba makes. I mean, the fact that, yeah, I mean, you got to be careful with the trade that you go in because it's a good point. If you're, someone that's really physically laboring every day and you're going to trust yourself to the United States healthcare system, good luck. But I do think that the trades are a smart thing. I think if I was going to do things over, I'm a huge proponent of community college. I have 5 years of community college under my belt before I went to a
Yep.
university. I got multiple degrees from a community college. What I would probably do now, if I was 18 again, is I'd probably go to community college for 2 years, get an AA or two, and then I would go to a trade school, and I would enter a trade, whichever one I liked, and I'll tell you what, sometimes, and Jen, we, in our line of work, we work with a lot of tradesmen. I don't know how many times I've called out a plumber, I've called out a contractor, I've called out a tile person, to get ideas and bids and all this
Yep.
stuff. And I'll tell you what, sometimes I see these invoices from these plumbers and electricians come back and I'm like, whoa, like you were
Uh huh.
there for like 40 minutes
Yep.
and you like did two things. And I'm not
Yep.
trying to undercut what you do, but
No,
good for
because
you,
they're
man. Like
doing the
you're
thing that we don't have the knowledge to do. I
right.
ran into
And
the
that's what
same
it's
thing.
about, right?
I was having a little bit of water come into my electrical panel, and my electrical panel is only, I don't know, probably about 5, 6 years old, right? And the old one was replaced because I had water leaking into it, and I didn't even know that there was like
Mhm.
that it was. So when we had a really, really, really bad hurricane level storm, and I went in the basement, and I was horrified, horrified. I was panicked, and come to find out, it was just the ceiling that putty that they put around the top where the main line comes in.
Yep. Yep.
That's all it was. And then where it connects into the meter, they replaced it. N- To your point, they were there with me chatting about an hour. Cost me $700. Seven
Yep.
hundred
And
dollars.
what are you gonna do?
Seven hundred
Not pay it?
dollars.
Not
And
call them? Not pay
I
it?
was glad
Not
to
have it
pay it
done? Right?
because I don't knock on wood, no
Yeah.
issue, right?
Right.
No issue at all. But that's the type of thing that you can look forward to, you know?
Yeah.
Um, Joe, thank you so much for being on this
It's my
stream.
pleasure.
And you know what? Claremont, California is where you're hailing from. Folks, if
Yep.
you are, thinking about looking in the east of LA area, you need to, some help in that area looking to buy or sell, you can look up Joe because Joe knows the stuff. He has some good live streams. Your live stream is every Wednesday, right?
Every
Every
Wednesday,
Wednesday.
yeah. So tomorrow we'll be on the channel at 6:30, and I believe I'm finalizing my topic this evening with some research. But I found an interesting article about how builders are kind of taking it on the chin right now, and yet but
Uh-huh.
resale homes are still doing okay. And so we're kind of wondering, and so we might be talking about how builders are having a hard go in this market. But yeah, every Wednesday, 6:30 p.m. Pacific Standard Time, we're on the channel, and the streams are a lot like what we do here. We kind of hang out, talk about real estate, whatever questions you have, throw them into the chat, and we have a grand old time.
That's fantastic. Fantastic. Well, um, my tummy's telling me that we gotta go into
About
close
that
down mode.
time, huh?
But hey, listen, Joe, thank you so much for being here.
Thank
I
you.
really appreciate it. Always a pleasure, my friend. And I appreciate you sharing all your wealth of knowledge and two
Thank you.
cents and whatnot. And thank you. A special shout out to all those that jumped in the chat. I know there's a good bunch of you watching, and when you guys comment in the chat and ask your questions, it makes the conversation so terrific, and I really, really, really appreciate it. And we back again. Actually, no, I won't be back next Tuesday. I'll do a community post. Um, Joe, my daughter's graduating high school,
Oh,
and
awesome.
all the end of the year stuff. Her last day is May
Yes.
30th, and so I've got
Yep.
we've got a banquet. She's got a banquet Tuesday night, so Mom's not missing it. I'm not
No,
gonna miss it.
can't miss that.
Nope.
Can't miss that.
So we're gonna press pause for next week, but then to the next week after, because I'm here weekly, Tuesdays 6 p.m. East Coast time. So whatever time zone you're in, you can do the math and figure that out. But it's 6 p.m. East Coast time every Tuesday. So, Joe, have a great week, everyone.
Thanks,
Have a
Jen.
great week. Be safe, be good, looking in on your neighbor. And as I always say, if you're having a discussion with someone and you disagree, seek to understand, do your research, ask questions. And you might be surprised that you have more common ground than you realize.
Yeah,
But
good
that
point.
starts with a conversation first. Let's not jump. Don't jump to the conclusions. Seek to understand. Have a great
Good
week,
point.
everyone. We'll see you next. We'll see you in 2 weeks. Be good. Have a happy Memorial Day.
Hey guys.